Hello viewers, welcome to my channel Sensor 360 Investor, where we use best practices from companies we invest in around the globe and apply them to the investing process. Today's video, we're going to focus in on equities, and we will take a look at a particular company. Before we begin, a quick word about the disclaimer. This channel is not providing financial advice. Please pause, read through the disclaimer, and then continue. Okay, welcome back. So without much further ado, let's begin the show. The company that's going to be analyzed in this video is Tesla Motors. The data study is over the weekend and actually over the prior 2 weeks. The price as of the weekend was $180.19. So let's take a look at the company first. In terms of the business description and mission. The mission of the company Tesla Motors is to accelerate the world's transition to sustainable energy. So I think most people familiar with Tesla would relate to that. A couple of key things from about their business description. It's a vertically integrated company around sustainable energy. They sell and make electric vehicles. They're also vertically integrated with solar panels, energy generation, batteries, and charging stations. So Tesla principally makes its money by selling EV cars, notably in production and in the market. They have their Model S, X, Y, and 3 product lines. And coming soon, they'll have their trucks, the Semi and Roadster product lines. They're either in development or testing. Tesla also licenses battery technologies to other companies. It has its EV charging stations network for mostly for Tesla users, and they do have the largest network out there. In addition to that, Tesla also sells solar panels, and they also make money from warranties, some servicing and financing activity. Okay, so here's a new chart which I'm going to introduce. This is a SWOT analysis. It's a tool from most MBA classes, and so let's take a look at. It's not an exhaustive list, and certainly couldn't cover that in short videos like this. But here are some key aspects of the SWOT analysis. In terms of strengths, first mover advantage. So Tesla definitely got a first out of the gate game changer, and almost kind of form the marketplace for others to follow. It has a global footprint with factories around the world now, and the biggest advantage Tesla has, it has millions and millions of miles of recorded data. They have a lot of data that they can analyze in terms of test mileages and actual mileages from their cars on the road. In terms of weaknesses, Elon Musk, who is known as the Techno King, is spread too thin. He's not focused on Tesla. The auto industry, Tesla, even though they claim to be a sustainable energy company, at the end of the day, most of their products being sold is still tied to autos. The auto industry is cyclical, and so therefore subject to the whims of the economic cycle, business cycles. The global supply chain has choke points, particularly around semiconductors. Opportunities. There's quite a few opportunities for Tesla. Transition to new alternative energy usages is a massive area. There's a massive TAM in energy displacement, licensing technologies to even its competitors, the battery development, which will help to increase mileage. They're cross-selling solar as they build out the factories and get more automated and robots in place. They're getting to economies of scale. That leads to margin expansion and allows them to add new product lines. So coming on lines, truck, semis, and roadsters. In terms of threats, there's intense competition in this industry now from the traditional auto manufacturers. And in terms of regulation, the withdrawal of incentives could impair Tesla's profits. Okay, let's check on the CEO. CEO is Elon Musk, who also claims to be Techno King of Tesla, as well as Chief Executive Officer. birthplace, South Africa. His education includes University of Pretoria, Queen's University, UPenn, and Stanford University. And his key achievements are pretty well documented. Developed some web software, which he sold to Compaq, went on to develop PayPal, and then formed SpaceX. Started doing the Solar City with his cousin, Tesla. He's into the Boring Company. He has developing brain-computer interfaces with chips and pigs that they want to put into humans in terms of AI. He's got the Hyperloop. And most recently, he purchased Twitter. So with all of that, and leave in the comments whether you think Elon Musk is an effective CEO for Twitter, and also for Tesla at the same time. In terms of historical performance, let's take a look at that. So just some 5-year average numbers. Revenues, earnings. So this cash is incorrect. And PTP minus 2.1. It's been moving up. ROE is still negative, but moving up. They're growing it. And this is over a complete 5-year, and debt has been moving down, which is actually a positive. But in the 12th trailing month, revenue continues to move up, but there's been some downward movement on earnings and profit margins. And then here we have the EPS chart. So the EPS is still projected to move up. Even though it's down from its estimates, it's still up from the prior years. So that's why we still continue to see an upward trajectory in EP. And as we can see, prices come off quite a bit of late. And part of that is the fact that Elon Musk, who is the largest shareholder, has had a couple of rounds of substantial selling. And then if we look at the 5-year performance of the chart, if we just take the calendar years from 16 to 21 5-year, Tesla has returned compounded 86.93%. If we take a 5-year trailing look at it, just as of 11/19 working backwards, it's comes at 53.66, which has dropped almost half. And we can see that price drop here from around the 400 range down to below the 200 range now. So that kind of makes sense. But overall, it's still been a very good investment. And if you'd bought it back here in 20, you would be still pretty happy with your returns. Okay, looking forward, so revenues moving up and earnings are still moving up, even though there's some slight revision downwards from higher estimates. They're still higher than the year ago. Okay, so recommendations, analyst ratings. Here we have it comes out to, if you just look at the buys and sells, etc., the recommendation, the average aggregate score is about 2.2, which is in the kind of weak buy, more like hold area. But if you flex that, the sentiment is poor. Price targets, different time frames. Current year is 225, next year is 310, and then 5 years out, you're looking at 425 to 535 based on the models. Now, on a word on valuations. So valuation, Tesla is a difficult entity to really come up with a good valuation, partly because they were in growth mode and had coming in from a lot of negative numbers, which have been growing. And now they did become profitable a couple of years ago, and they're starting to move that up. So that makes it difficult to put those metrics through a model. And so if we look at valuation 3, in terms of fair value, Tesla's fair value comes between 190 to 240, depending on how you model it. And then given that Tesla's already trading below 200, does make that slightly attractive where it's at and close to fair value. However, given the overall conditions and the headwinds, etc., then valuation 1, valuation 2 come into play. Valuation 4 we'll talk about in a later slide. Okay, so let's look at tailwinds and headwinds. On the bullish side, supporting the pro argument for Tesla, disrupting legacy power generation, the margins are increasing as they reach economies of scale. It is the leader in EV and charging, first mover advantage there. Intangible assets in terms of its just know-how in EV production is ahead of everybody else, and it does commit 5% to R&D for continuous development, and then it does have cost advantage now as it hits with gigafactories around the world come online, and it's vertically integrated with batteries and solar. On the bearish side, it's now beginning to face stiff competition from existing auto manufacturers. EV adoption is driven by government incentives. If they go away, that will hurt Tesla. Solar panels, batteries will commoditize faster than Tesla can reduce the unit prices. That will also hurt them. And then in terms of, it potentially could be seen as a niche segment of the larger auto market. And in terms EV penetration, while it's kind of moving up and growing, is still a tiny fraction of the overall global auto industry. And then the CEO is spread across so many different companies: Boring, Neuralink, SpaceX, Twitter. And so the question is, how much time is he really focusing on Tesla and growing that, especially with the competition that he's now facing, or Tesla's now facing. Okay, let's have a look at company health. This is a new slide that I'm introducing, and so it's going to check a look. It's going to take a look, do a health check on the company. We're going to look at these vectors like financial, operational, earnings, management, sentiment, and technical. So I took I haven't scored all of these, but I did take one look at the ones on the right hand side. Management is kind of yellow because the CEO is tied in so many different efforts. The analyst sentiment is rather neutral to negative right now because of some of these shares being sold, and just the question of how much attention is being put on Tesla, especially in light of upcoming competition. And technically, it's obviously red because the stock price is halved from its peak, from 400 to 200. So it's in its own bear market there. But this will get developed out in future videos. Okay, disposition, decision time. Buy or not buy. So the current price as of the video is at 180. The valuation range falls between about 110 to 145. And if we look at the fair value from Yahoo, it says it's near fair value and 9% estimated return at these levels. So we did notice the 1 year, note the 1 year target prices, which are above 180. So certainly there could be some upside between now and the end of the year. And then in terms of, if we look at DCF, discounted cash flow, that comes out to $40. That would put Tesla as significantly overvalued down in this range on the kind of valueometer. And DCF for a lot of companies, especially high growth companies, is not a good way to come up with valuations, just because the models can't really support the negative numbers and the growth, and there's just not enough data to really feel confident with those. So you have to kind of look at other ways to value growth companies. Okay, so be interested in your opinion. Would you agree with the analysis? Based on this information, are you a buyer, holder, seller? Put this on your watch list, or you would just outright pass on the Tesla stock. So we're interested to see if you agree, disagree. Please leave a comment. Okay, so that wraps up the video on Tesla's analysis. If you didn't read the disclaimer, please take a moment to do so, and hopefully you like this video. So it would be great if you subscribe, click the thumbs up, like, share with your family and friends, and if you can leave a comment, that would be great as well. Thanks for listening. Thanks for watching. I will see you on the next video. Goodbye.